Just to touch on something else you said earlier in our chat, you're now 4 and a bit years into the 5 year plan for the CII. What does the next 5 years look like?
Well, I mean, if I said rather boringly more of the same, I mean, not more infrastructure change. I mean, the whole point of investing in the work we've been doing on our own IT infrastructure, our own delivery ability for learning, stuff like that. And obviously, you don't want to be doing that every 5 minutes, but it's really then that what we didn't have before, if you want to put it that way, is we didn't have much scalability. So every time we did something new, we either had to employ more people, or else we had to stop doing something that we were doing. And you can imagine the space we cover, because it's, although we're called the Chartered Insurance Institute, it's insurance in the old-fashioned sense of the word. So we cover everything. What is now general insurance, yes, but we still cover pensions, protection, all of the stuff that's come out of the old life offices and them transforming themselves, and now all the new areas of financial planning and wealth management. We cover that whole space, and there's no way that you can have content both from a learning and qualification perspective, and also from a membership perspective, across that wide scope, unless your own systems and processes and your way of going about things is actually very scalable. So I suppose two things we do know. One, we know that there are areas where we're underweight in terms of our traction with the sector, if you like. So we know that protection is somewhere where we have historically been a bit light, and we know that there are areas around insurance. I mean, you could say reinsurance. We are a bit lighter than we are in the sort of general insurance space. The whole area of employment benefits, which is now one of the major areas where people get protection products and sort of employment protection. That's probably an area where we are lighter than we should be. And then new areas have come along, like healthcare is obviously now a big business, whereas historically that would have actually been something that was very specialist and quite small. So that, believe you me, there's no shortage of areas where we have some engagement, but we probably don't have as much engagement as we would like to have. And the reason I say that is that if you think about, we talk about the life journey. So if you're, there's one thing all of us as human beings share until we die, and that's that we're all on this life journey. And life is a risky business. It's a wonderful thing, but it's a risky business. And human beings are not actually that good on their own, left to their own devices. They're not actually very good at thinking what's going to happen along the way. And that's what our sector is all about, really. We do know these things. We do know what's likely to happen to people in their 20s and 30s and 40s. And we do know what's likely to happen if they get married, or if they have children, or if they contract a disease, or if they get dementia. We do know what that looks like. But we probably don't do enough to take that theoretical knowledge that we've got and actually really turn that into products and services that put the life journey of the consumer at the heart of how we're trying to do what we do. But it's a journey. I mean, the whole of financial services hasn't been around for that long, and pure marine insurance maybe for a bit longer, life insurance maybe for a bit longer, but almost everything else has developed certainly within the last 100 years. So it's not surprising that there's a lot more for us still to be doing that would really help people live a less risk, from a financial perspective, a less risky life.